we can continue. I know most of you, okay, and most of you all already know me, right? We are connected on WhatsApp and LinkedIn and even Discord, right? So I think most of you know me. So we can just start without wasting any time, right? So I'll just go through the like the delivery plan, okay, so that it's like easier for you to understand going forward. Okay, like previous classes, level 1, it's the same. We three instructors will be there. Sunny will most probably not be there. Okay, he will be there for the checkpoint support and everything, and doubt solving sessions he will be there. Okay, but for classes, most probably Sunny will not be there unless there's somebody who is like absent. So we will generally not miss a class. So Sunny will be the substitute. Okay, so if anybody is absent, then Sunny will be substitute. Otherwise, it will continue, and most probably we three will only take the classes. Okay, so we have divided chapters among ourselves, um, based on our expertise. Like wherever I am better, I will take that lecture. Wherever Mitesh is better, Mitesh will take. Wherever Mithil is better, he will take. Right, we have kept the same format, but this time little bit change. What we have done is that previously what used to happen was that Friday one lecturer will take, Saturday another will take, and Sunday another will take, right? So in that the continuity was getting broken. So somebody suggested to me that why not you continue one week with one instructor and then another week with another instructor. So I like that idea. I put that idea to the instructors, and they also like the idea, right? So now, like each will week will be taken. The all 3 days will be taken by one person. Okay, one instructor will take that. Next week, another instructor will be there. Next week, another instructor will be there. We'll be rotating. Like, say, first your lecture was taken by Mitesh. Now I am taking. Second, next week, Mithil will take. Then again, we'll keep the same pattern. Mitesh, Sovit, Mithil. Right. For each level, it will be different. For level 1, it was Mithil took the first lecture first week. Then Mitesh took, and then I will take. Okay, for level 3, I took the first week, then Mithil took, and then Mitesh will take. Right. So we will do it one week after the other, like that. Okay. Also remember that wherever there is Mitesh lecture, Mitesh will always take lectures on Saturday and Sunday. So most probably you will get emails on time. Okay, but always assume that if it is Mitesh's like turn, then it will not be on Friday, because Mitesh is not available on Fridays, so he will take only on Saturday and Sunday. Saturday it will be 6:30 in the evening, and Sunday it will be morning 10 a.m., and then Sunday evening 6:30. So that will be the schedule for Mitesh in most cases. Okay, 99% cases that will be the schedule for Mitesh. In all other cases, it's Friday 6:30 will be your class. Saturday we will do it morning only, so 10 a.m. to 12 approximately, and Sunday again morning 10 to 12. Okay, so Saturday Sunday evenings will not keep classes if I am taking or Mithil is taking. Okay, so that will be the schedule, more or less. This will be the schedule, but you should be like available on Saturdays and Sundays, like, because sometimes it may happen that, say, I'm not available, or Mithil is not available for any reason, or Mitesh is not available for any reason, because there can be some situations like that, right? So we may change, like instead of morning we can take in the evening, like that. But we will not miss the class. 99% we will not miss any of the classes. There will be one of us will be taking the class. If we all three are not available on that particular date on that time, then Sunny will take it. Okay, and then if Sunny is also not available, then we may have to miss. Okay, otherwise you keep blocked basically your Friday evening, Saturday morning, Saturday evening, and Sunday morning, Sunday evening. These five schedules, like 6:30 to 8:30, 6:30 to 8:30, and morning 10 to 12, 10 to 1 approximately. That you keep that thing for the classes. If by any chance there is no class for any reason, we have to shift it, then you can do self study. Okay, so basically the idea is that these 3 days is for CMT studies basically for you. Okay, So you, all your other things you can plan on any other weekday, unfortunately. But since you have thought of doing CMT, you'll have to sacrifice somewhere, unfortunately. But that is how it is going to be. Okay. Any doubts with this schedule? Any questions?
No,
No,
sir.
sir.
Okay. This list will be updating. What we'll be doing is that we'll update, like we're trying to get like update it, and then give this list to you so that you know more or less which day which chapter will be done, so that you are prepared before us. Like you should always try to be before us, not after us. Okay. So I want you to be all before us, and this time the content has reduced drastically. So I think you can easily do three readings of the curriculum. Right? If you put proper time and effort, I think three times you can read the curriculum easily. It's like hardly, I've checked it, around 420 pages are there. That also, like workable will be less than 400. Okay, there is something which is not usable at all, right? So more or less, 400 pages are there, which is very very minuscule if you see for any charter course, right? You will not get a charter course with such small content, right? So it's your opportunity. Read it twice, thrice, maybe four times, and apply all those things on charts, whatever you can. Obviously everything you may not be able to do, okay, but whatever you can do. And and that will be the best way of doing things. Okay. Okay. So today I'll start with charting, this thing, chapter, which is the profile, market profile. Okay. It's a very very small content. Okay. Market profile and price behavior. So market profile is basically a different type of charting technique, which was recently only developed, like 30-40 years back. Okay. Mainly but there are two, maybe there are three main people who actually did it. Okay. The most uh, like the first one, or what we can say the most popular one, is the Peter Stanlemer. Okay. He was a BOT trader. Yeah, he started doing market profile, and then there are few authors. If you are more interested to market profile, there are few authors, and there are some books on market profile, only on market profile. Basically market profile is mostly used uh, for short-term trading, extreme short-term trading, like intraday trading. Generally, time frame used for market profile is 30 minutes. Okay, I don't do it personally. I have done little bit of research on that, not much. Okay, there are few people in India also who are very very good in market profile. Okay. Sunny does uses market profile for his trading. There's another person in Chennai called Jay Chandran. He is very famous in Twitter. His Twitter handle is Nifty Wizard or something like that. Nifty Wizard. So if you want to really like know more about market profile, he is one. Another person in India is Rishi Umaria. He's again master in market profile. He's also like, I've not met him for last 3-4 years, but I don't know of what he does now. But he is a master in market profile, and there are few more. These two I remember because I know them personally. Okay. These three, Hassan is also there. Okay, but there are other people also in all over world. There will be like many people who do it, but the most famous ones, I don't remember the name, but I think if you Google it, maybe market profile traders or authors, you can just if you are more interested in short term trading, market profile is something which does quite well. Okay. So, Mind Over Markets. Yes, this is one of the books. The author name is James Dalton. Okay, he's very good. And then I don't know what Deshpande. This market calls. He also uses Rajendran also uses market profile. Okay, and then maybe this book. Uh, Stan Miller. This is the person who firstly started it. So his book is also there, and then there will be some more books. Okay, so if you're interested, you can go through them. Okay, it's a different study, very very like unique type of a study. Uh, James Dalton and this Stan Miller. Okay, these are the two pioneers worldwide, and then Jay Chandran and Rishi Maria, and maybe many others will be there. Okay, so it it's a evolution of charting technique. Traders have developed various tools to organize, view, and analyze price data. So this is one of them. Okay, uh, Peter Stenmeyer introduced it in somewhere in 1980s. Uh, he was a CBOT trader. Uh, Basically, the idea about market profile is such that every day there will be some point where the price is as equilibrium, right? uh, the midpoint of the day, some people use say VWAP for that purpose. Market profile uses its own method of identifying that period where the market is at equilibrium, or what we say fair value, fair price or fair value of the market for that day. Like it's each day this fair value will change. Okay, it's not the same as your fundamental analysis fair value. It's not the fundamental analysis fair value. It's the uh, say one day's fair value based on market profile. Okay, so that is like the median for that day. That is the point when buyers and sellers are balanced, or the market is at equilibrium. A fair price is established. Buyers and sellers trade around this price. So generally, it's the fair price, and most of the trades will happen near to this fair price. Prices move when there is an imbalance of demand and supply. Okay. So when the prices go far away from this fair value, okay, uh, because of basically demand and supply for that particular period. Okay, so these it will be seen in the chart. Okay, when there's imbalance, then the prices will show that. I'll just show you here. I'll just show you this first. Okay, so this is a basic example. Okay, so this is data of a currency, and say it is so the day somewhere must have started. So what they do here is that each time they give a alphabet. So each period is 30 minutes. You can change that period to 15 minutes. You can make it 1 hour also. It's up to you. But generally we use 30 minutes. Okay, so it can be made 5 minutes also. That is changing. But the most usable, most people what they use is 30 minutes for market profile. Okay, so each alphabet donates one time period. So say if the market starts, say what example they've given here. Say market starts at say 8:30, right? So 8 o'clock to 8:30 market starts. So 8 o'clock market starts. So the first half an hour will be denoted by alphabet A. The second half an hour will be denoted by alphabet B. The third half an hour will be denoted by alphabet C. So 8 to 8:30 a.m. will be A, 8:30 to 9 a.m. will be B, and 9:30 to 9 to 9:30 will be C. Like that, we'll continue for the entire day. Right. So if you see this chart, what this shows is that in the first half an hour, okay, that is 8 to 8:30, market made a top of 1.1897, right, and market made a bottom of 1.1883. So this was made in the first half an hour only, this entire range, right, and the rest of the day, market remained in that range only, right, because if you see A is everywhere, is everywhere. That means that the first half an hour there was a a big volatile period. Generally, first 5 minutes are very volatile, right? Markets go anywhere, right? So, and then the balance day, it was like sideways. What we say, the opening range breakout. So the opening range was established in the first 30 minutes, and then there was no breakout. The entire day market remained in that range, right? Whatever was the price. The second half an hour, if you see, market remained between 1.1896 to 1.186, right? In that range, market remained. Third half an hour, market remained between 1.1893 to 1.1887. Because if you see, C is from here till here. Like same way for D, for E, for F, okay, like that, right? K must be the last half an hour. Okay, so if you see, it made a shape of a bell curve, right? Let me see if I can show. Okay, there is some questions in the chat box. Sir, by what date we are expected to complete the teaching the whole syllabus? So we are expecting to complete by 18th of May. Okay, so by 18th of May, we started from 14th, right? And by 3 months, we will be able to complete the syllabus. So by 18th May, we expect to complete like by this. So maybe little early also than that. Okay, the latest we are taking is 18th May, right? Your exams will be somewhere say 6th. They're starting from 6th of June, right? Somewhere there, 8th or 6th, right? So we will be at least 20 days before that we will be able to complete the curriculum. Okay, and would be the notes be updated on our Yubha platform? Say we are continuously working on it. We expect a major portion to be done by 28th of February. Still, there may be something which will be left. So by 15th of March, I hope everything will be done. Okay. Uh, CPR pivot point, yeah, it may be. I'm not very sure about pivot point. I've never used it, but yeah, many people use it. It may be similar to that. I'm not very sure because I'm not sure about CPR. Okay. Okay.
So this market profile also use close only data, or they also consider high lows.
It close uses close only data for that half an hour.
Got it.
Okay. 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 So if you see, it takes a shape of a bell curve, right? We did bell curve, little bit of bell curve. It's a vertical bell curve. Okay, it takes a shape of a bell curve, right? In most cases, not always it will make a shape like this, but in many cases it will make a shape of the bell curve. Okay, so basically the fair value will be somewhere here. Okay, somewhere in this range, the fair value will be there. Okay, somewhere here is generally they take it as a fair value. Okay, uh, this basically this entire area is a fair value. Okay, and if the price is below this range, okay, then this becomes the resistance. Okay, this level is the resistance. Okay, if the prices are below this 1.1891, okay, then this becomes the resistance. And if the prices are above this, okay, 1888, okay, 1.1888, okay, so this becomes the support. So this is the resistance. Okay, this is the support. Okay, depending upon where the price is. Generally that is how they take it. Yeah. Price moves when there's sorry yes, sir. Price moves when there's imbalance of demand and supply. Price movement is viewed as a marketplace negotiating for a balance. Okay, so basically like if you see here, here there is a supply coming in, right? Because the prices are not able to sustain at these levels, and here there is support, right? And somewhere in middle is the fair value or fair price, right? Excess supply means prices fall until sellers are willing to sell. So if there's excess supply, then prices will fall till the sellers are sold out whatever they want to sell. Okay, and excess demand means that prices rise until the buyers stop purchasing. So if the buyers have stopped purchasing, then demand is exhausted. Okay, and then prices start to fall. Shyamalan's observations were there when he found this thing. Okay, price levels tend to cluster around the fair price, so that is a midpoint. Some in most cases, okay. Generally, the prices. So if you see here, okay, prices most of the day was say trading here, right? Because this price was attained in all like if you see these prices 1.1890 and 1.1889, this was attained in all the intervals, right? So price clustered here, right? That is why it made this bell shape, right? So this is basically the for that day's fair price. This is fair price. Trading days were divided into time periods to track price behavior. So they divided the trading day into say 30 minutes and then divided it. Each time was 30 minutes. So they divided in that sense. Whatever is the duration. Like in India, there's uh, 3 hours, sorry, 6 hours and 15 minutes, right? So there will be 13 alphabets, right? So A, B, C, D, E, F, G, H, I, J. Up to J, you will find the alphabets for Indian markets. The price distribution often formed a bell-shaped curve, indicating normal price behavior. So when there's a bell-shaped curve, then that is the normal price behavior. Most of the day, it will be like prices will be more volatile at the start of the day, and then during the day they will start to find the equilibrium. They've given an example of Euro USD, okay, which we just saw. Okay, so monitoring your Euro USD within a price range of 1.1800 to 1.1900. Price is plotted on the vertical axis. So here, if you see the price on the vertical axis, right? Okay, and price on the vertical axis, time duration, what we and time period is divided. As I said, each 30 minutes will be given A, B, C, D. If you are doing it for 15 minutes, then the first 15 minutes will be A, the second 15 minute will be B, like that. Okay. Trading days split into time periods, each representing by a notation, for example, A, B, C, D. This is what I've explained. Okay. Charting price movements. If price trades between 1.1883 to 1.1897 for the first 30 minutes, that is 8 a.m. to 8:30 a.m., and A is placed next to those prices, right? If price move further, responding notation A, B, C are added based on the time intervals. As I said, the next 30 minutes will be added after that. This structure approach uh, helps traders and visualize the price distribution over time. So what we are doing is basically seeing the distribution of price. Okay, this we have already seen. Okay, identifying fair prices and market imbalance. So basically, identifying the fair price and then where there's imbalance, that is useful for market profile. Price frequency and fair prices. Price touched multiple times during the day indicate balance between supply and demand. So if the prices are touching to a particular level, okay, then we can say that there is balance adhere to that price. These frequently observed prices are considered fair prices. So wherever the price are mostly touching every time, that is the fair price. Market imbalance is basically the high price and the low price is basically the imbalance price. So there the market is not able to sustain, right? So supply exceeded the demand at the high price, right? So if you see at 1.897, okay, 1.1897, the there was no less demand and more supply. That is why it was not able to sustain those levels and start to fall from there. And same way, 1.1883, where there's more demand coming in, and that pulled the price higher. Okay, and the supply was less. An imbalance of demand and supply, the price was higher than was the fair price, and the buyer stopped purchasing. So their buyer were not willing to buy. That is why the price halted there, right? For the same way, low price was 1.1883. Demand exceeded the supply. There is again market imbalance. Buyers could not continue to find sellers at that price, and the sellers became scarce. Right. So there were less sellers, and buyers were not able to meet that. Right. Time period notations are basically previously there were only uh, um, say 8 9 hours of trading, but then they started to be 24 hours. So what they did is that they introduced capital letters A to X for midnight to noon. So basically from midnight to noon will be capital letters, and lower letters will be there from noon to midnight. Okay, so from morning at 12 a.m to 12 p.m will be capital letters, and from 12 p.m to 12 a.m will be smaller letters, smaller A to X. Other traders use colors and symbols for shorter time intervals. So you can use other colors. You can have different colors. Okay, in the market profile. Like I'll show you a practical this thing. I should be having it. I've not used it for very long. I did experimented a little bit with it. Um, we'll have to go to intraday data. Intraday data. Okay. Should be having 5. So say every software will have little different market profile structure. Okay, um, let's go to 30 minutes. 30 minutes is not there. Fine. If we see the entire day, this is each day is different. Today is uh, starting on this data. Today's data is not fully loaded here. Let me. Okay, doesn't matter. I think the data will be there till 3 o'clock, so it should not be an issue. Okay, so if you see, this is, yeah, so if you see, A is there, so the price of GNSC, whatever is the security. Let's go to Reliance, which is more liquid. Reliance. So in the first 1 hour, so Reliance was in the rates of say 1236 to 1227. First 1 hour was there, and then the second 1 hour it was at 1236, somewhere in that range. Here 1239 somewhere to 1236 in that range, and then it came down. If you see, C is here, so it came down to 12, between 1239 to 1232 or something. Okay, and say for this day, if you see, This yellow line is the equilibrium. So 1227 was the equilibrium. The close happened, say, I think close, not clear here. Close at 1226. No, this is the close. Sorry. 1227 is the closing price. The equilibrium should have been, let me check. What color it's 1233. Was that the close here? 1233. So yellow line is the closing price basically. Okay. Yellow line is the closing price for that day, and equilibrium with another line of another color. It's not showing here. I'll just go to another this thing. Must be another. So value this. Yeah. This will not have alphabets. This is also market profile, but this doesn't have alphabet. It just have a color. And it is basically on the candlestick chart. So candlestick chart is also there. Okay, in this, if you see this, this is the closing. Yellow line is the closing price, and the equilibrium in this again. Equilibrium where is somewhere here only, right? Around this will be. I think these white lines are the equilibrium. So this is basically the resistance. 1236.4 is the resistance line, and 3064 is the support line. The market close in between here. Okay, here it was again the same, 1236 and 1224. Here it is 1230. There's a little bit of difference between these two. Okay, there can be different authors can have different uses. Yeah. Uh, there are others also. Rishis was better, I suppose. Check. Yeah, here it is. Small drag drop old drop. Yeah, here it is. It is just this is again similar to this one only. This is much clearer than this because it's in white background. Okay. So again, the levels will be the same only. Okay. But I think there is one more which is better. Yeah, this is again doesn't has the alphabets. This one has alphabets. This is much clearer. This one is missing only. Yeah, but this has the candlesticks also. I like to see that. Yeah, this is much clearer. Okay, so you can see that this is the high. Say 1240 was the high, right? Uh, and that was made on the first second half an hour. B is the value, right? So that made in the first half, second half an hour here, and then the low was here, and say this was the closing price 1227 was the closing price, and equilibrium was in this range 1236 was the resistance. So for the next day this 1236 becomes the resistance, and if you see the previous day also this 1236 was the resistance, right? It did made somewhere similar high also only, okay, and then the support was somewhere at 1230, right? So this was for one day back and this was for today, okay. The data is not updated till the last minute, but like till 3 o'clock it was updated. Okay, if we can see here again, this is the same. So, what we are seeing here is along with the candlesticks here. Like it can be up to you whether you want with the candlesticks or you want without candlesticks. Okay, I like to see it with candlesticks. Okay, so this is how it is basically. Okay, any doubts with this market profile? So, in your curriculum, at least for level two, trading with market profile is not there. If you are interested in it, then you'll have to read some of the books, some follow some of the authors, or these people are very good at it. Okay, um, but one thing is that at least with my understanding, market profile is not uh, it cannot be systemized. It cannot be algo cannot be made out of it, right? It cannot be a rule based setup. Generally what whoever uses market profile generally does it manually. Okay, it's all manual trading, at least what I understand and what I know, at least for last 2 3 years I understand it. Okay, so nobody uses full say non-discretion system on market profile. Everybody has some discretion. Okay, as per my understanding. Okay, that is the reason I don't use it, because I cannot do something which is not testable. Okay, so I that is the reason I don't use it. Okay, that is the major reason I don't use it. Otherwise, like you cannot do everything, right? Obviously. So next today we'll do point and figure charts. Any doubts with market profile? This one thing. Can you please tell me the construction again of market profile? So market profile construction is the same like I told you. Each generally it is for 30 minutes, like for each day. First and whatever it say, I'll show you here. We can change this, right? Instead of 30 minutes, I can make it 15 minutes also, right? Generally it's the 30 minutes which is used, but we can make it 15 minutes also, if you see. Now it will be more detailed, that's it. Okay, then it will be like first A will be for first 15 minutes, B will be the next 15 minutes, C will be the next 16 minutes, 15 minutes, like that. Okay, that's it. And say every day we start with zero, because it's for day trading. We generally don't use the previous day's data, but obviously you have the previous day's data on the chart, so you know that this previous day this was the high, this was the low, this was the equilibrium for the previous day. So those prices also give you support and resistances, right? Or you can also do a market profile of week, say daily also, right? If I go to daily, okay, daily it doesn't work. Okay, uh, in some cases it does work. Yeah, if you see in this, it is working, right? So you can use daily also, right? So what is so the equilibrium? Say if you see here, uh, this becomes a major support, like because say I cannot. What I do is- Okay. So if whatever days it is, say 4 5 days or 10 days, whatever days it is, okay. So basically your equilibrium will be somewhere, okay, yellow, so that is visible, or maybe blue. Okay. So somewhere here will be the equilibrium. Yeah, this will be the equilibrium point. Yeah. As of now, the close is somewhere there only. The close was somewhere here. Okay. The basic idea here is that this is the lower point. The price is currently here. So this is the support, and somewhere here will be the resistance. Okay. This is the resistance. Okay. So if the prices move up, generally it is expected to take resistance here. So basically, if you buy here because it is near to the support, you can exit near to this resistance level. Okay. And if it comes here, you can like exit your longs and then take a shot and again target this, right? So this is how generally, basically it is more of a mean voting thing. Wherever the price goes far away from the fair value or fair price, basically when it comes close to the fair price, we shot there, and when it comes to near to this lower this thing, lower fair price, that is where we try to buy somewhere here. Okay. This is basically mean version. What we'll do, like we'll do this mean diversion. Okay, we'll wherever it go that we'll do that mean diversion basically. Okay,
Just
that is
one,
how is
just
it.
one doubt,
Yeah,
sir.
yeah,
Basically, the construction, as I was asking you, so it's
yeah.
basically based on like time frames of 15 minutes, or usually, as you said, that it is used for 30 minutes, right? So let's say suppose the market starts from 9:15 to 9:45, 9:45. That is half an hour
Right,
time frame. So that will be considered as A, right?
right, correct,
And from
correct,
9:45 to 10:15, it will be considered as AB,
correct. Yes.
and then so on, like ABC, then ABCD, then
Yeah.
ABCDE, like that.
No, no, it's like A, then B will be separate.
Okay,
Right?
B
If you
will be
see,
separate.
yeah, B will be separate. Okay, it's not necessary that everywhere A and B both will be there together. In some places, only B will be there. Like if you
But
see,
how come this
yeah,
two alphabet come together? I mean, like,
yeah,
what is that
yeah, I'll tell
reason?
you. Yeah, yeah, I'll tell you. Okay. So I'll just go to that one with just with letters so that it is clear, right? I'll close this. Okay. So see, if you see here, the price, the first 1 hour, okay, was somewhere 12:36, somewhere there. And if you see, A is there till from here till here. That
Okay,
means first half an hour, the price was in the range of say 12:36 to 12:27, somewhere there,
okay,
right? And then in the next hour, if you see here, now next 1 hour, half an hour, it B is there, A is not there, right? So in the first hour, the price didn't went to the new high. So this
okay,
12239 was not reached in the first half an hour. It was reached in the second half an hour. That is why only B is there, A is not there, right?
okay,
And then it came down here. Here, if you see it, that means that price range in this range, in this. So it was
okay,
going to 1239, and at the lower side it was say around 1234, somewhere there.
okay,
The price
okay,
was there, right? For C, if you see, the price remained somewhere around, high was say around 1239, and it went up to say 1232, somewhere there. Okay, so that up to that point, the price was there. Okay,
So can you
it
repeat
didn't
once?
went below that.
So
Yeah,
can you repeat this once again?
yeah. Okay, I'll take a screenshot of it and then I'll show it again. Yeah, so that it's clear. Okay. Okay. So if you see, A is from here till here, right? Sorry, here till here. So for the first half an hour, price range remained in this range, and then for the next half an hour, B is somewhere here, right? So for the next half an hour, the price was in this range, okay, from here till here. Okay, it was in this range because if you see, B is not here. A is there, C is there directly, B is not there, right? So price were in this range only for the next half an hour, right? For the third half an hour, C is here, C is here, and C is here. So the price remained in this range up to here, somewhere here, right? C is not here, C is not here, right? And then D is here, right? D is not here. right? So the third half an hour, the D was the price made in this range, okay, in this range, right? So that is what we see. So where the price, if you see, most of the alphabets are here together. So for the entire day, most of the time, price was near to 1236, right? Right. So this becomes the resistance level. If the price goes below this, okay, so that this, if it would have bounced, then this would have been the resistance, right? For the next day tomorrow, 1236 will be a resistance level, right? So if the prices come near to that, we will short it, and if it breaks 1236, then we should exit our shorts and create a long position there, because now it is going trying to go up, because the equilibrium of the previous day, in fact this day also, it was somewhere here. If you see, in this day also, it remained most of the time in this range, 1236 to 1233, in that range only. The price most of the day it remained there, right? So this has become a resistance. This entire 1236 to 1233 is become a resistance, right? So if it bounces, this area will give a say, not let the price go above it, right? And if you see, on this day, the prices were near to 1237, 1227, right? Okay, if you see, this is for the equilibrium on third day from here, and today the prices closed almost at that range. This was the support of the 3 day back support, right? Prices closed near to that level only. Okay, so as of now, the price is in this bracket. Okay, it is not going beyond this. So wherever it breaks, then the next support and resistance will be decided after that. Right? As of now, it is in this range. Got it?
Yes.
Okay, it's not as simple as what I'll show you here. It is much more detailed. The entire book is there on that. There are various types of shapes, like uh, let me okay, so in packet profile, when you go into detail, there is a P shape. If you see, it makes like a P, right? This is like a P. It's a P shape is there, and then there's a D shape. There is a B shape. All those shapes are there. Okay, and each shape has a meaning. Okay, so if you see this here also, there's a P shape, and there will be a B shape, whatever, right? All these shapes are there, right? So you'll have to go deeper into it, right? What we are touching is uh, just the tip of the iceberg. Okay, like if you see, this is a very good you say bell B shape. If you see, it looks like a B, right? It looks like a B. So it has another meaning. This is P, right? It has another meaning. This is also P. It will be, there will be D also. If you see, this looks like a D, right? So all these shapes have a meaning, and now I don't know the meaning of each shape, because I have not gone deeper into it. At one point of time, I was looking at those things, but now I don't remember that. Okay, so if you are interested, you'll have to go deeper into it. And there's something also called volume profile. This is market profile is price profile. Okay, volume profile is again little different. Okay, I'll show you the chart. That also comes into market profile only, but there's another thing which is called market volume profile. So volume profile, I'll show you just for your knowledge. Okay, just stop this. Mm, no, I'm not sure this is the correct thing. I don't know whether it's the correct thing or not. But there is something called volume profile also, which is a part of this only. Where is it? There's some error in the code. It's blocking. Yes. Okay. So volume profile also there's something which you can explore. Okay. Not able to show you that as of now. Okay. There are a lot of things which are there. Yeah. This is not working, so I won't be able to show you as of now. Okay. So yes, this is that. Okay. Fine. So we'll move to point and figure now. Okay. Yeah, so we did point and figure in level one. Previously, point and figure was not there in level two. Now they've introduced it. Okay, and it's good only. What they've done is a good thing. Okay, so in level two, there is two three things. Firstly, the construction is not there of point and figure that we did in level one. Okay, so that has to be clear. They can ask you, I think, question on construction also, as per my understanding. Here, patterns will be there, and there are other studies using point and figure, like relative strength and breadth indicators. So that will be covered in level two. Okay. So there will be some basic patterns. Basic patterns were also covered in level one. Okay. Now we are introducing the complex patterns. Okay. And then there will be criteria for selecting patterns. So only external patterns are useful, right? And where we can keep stop losses. Say one good part about point and figure is that they are fully objective, and you can have targets with it, and then you can also have stop losses with it, right? So it's a complete system by itself, right? That's the best thing about point and figure. Patterns that provide insights into supply and demand. So obviously, prices tell us our supply and demand, and point and figure also helps to identify those levels where the supply and demand are there, like where the supply is coming with, that is the resistance levels, and where the demand is there, that is the support level. Fundamental principle of point and figure remains the same. The core pattern remains the same. Basically, which is that if you see, most of the work with point and figure is basically only on breakouts, a breakout on the upside or breakdown on the downside. That's it. Okay. Everything, every pattern will be like breakout or breakdown. The context is important in point and figure. Everything, every pattern will have a context, and that is extremely important in point and figure. Okay, and that also introduces complexity. Okay, for how we will be interpreting the pattern. This approach ensures traders focus on practical, higher probability trading opportunities. So basically, the idea is that we only focus on those patterns and those setups which have high probability and which have low risk. Right. The first pattern is basically the this we did in level one also, the triangle pattern. And basically, if you see, it forms a shape of a triangle, right? And then there's a breakout. This is a breakdown. So if I take the screenshot, always remember one thing in point and figure is that if you draw a trend line, I'm not good at trend lines. Okay, this is like a triangle, right? So if you see, this was not a breakout. Okay, because there was no X here, right? There was no X here. So this was not a breakout of a triangle. In point and figure, always remember that there has to be a double top or a double bottom pattern, right? Without that, there is no breakout, right? So the breakout happened here when the double bottom happened, right? This O when the this O happened, that is where the breakdown happened. The breakdown did not happen here because although the trend line, the price went below the trend line, but this is not taken as a trend line break signal. Trend line break signal will be always here, okay? Because there has to be a double bottom sell signal or double top buy signal. That is the minimum criteria for any point and figure chart. Okay, and this was the breakout. Basic idea is that you this is a consolidation. Price remained in this range for a very long time. Time is not seen here, but price was there, right? And then there is a breakout out of that pattern. Same way here, okay, price consolidated in this range, okay, and then there was a breakout. So if you see again, the breakout is here, not here. Do not do this mistake in the exam. Breakout is not here. Breakout is not here. Breakout is always with a double bottom sell signal or double top buy signal. Okay, many people do this mistake. So who are weak in point and figure or do not use point and figure. Obviously, most of you don't use point and figure. Okay, so these mistakes you tend to do. Yeah. So breakout happens in the direction, right? Triangle breaks can occur in on the upside or downside. So wherever the breakout happens, that is the trade you'll take. Okay, if it is on the upside, you buy. If it's on the downside, you sell. Pattern formation is basically some analysts require minimum 5 columns. So 5 columns is basically that say these are columns, right? You remember, right? This is column number one, column number two, column number three, four, five, six, and seventh column. The breakout is happening, right? So some will say that at least 5 columns should be there, which I will also prefer because less than that, if happens, okay, then the consolidation is not big enough. So to give any meaningful pattern, there has to be a decent consolidation, right? So it's up to you. Some people will take four columns also or 3 columns also. I personally will take 5 minimum. Yeah. The key feature is a series of inset columns. So if you see, each column is within the previous column, right? Similar to the inset bar in a bar chart, right? So if you see, each column is this is the first column, this is the biggest column, then this is within this column, and then this is within this, then this is within this, and then this is within this. Okay. There can be little bit here and there. If you see here, it went over. That is fine. Like this is acceptable, not a problem. An insert column has some same or fewer boxes than the previous column. So it can have same number of boxes also. If you see here, these two had the same high. Obviously, they generally will be smaller only in most cases. Okay, but can have similar boxes also. Similar number of boxes. Okay. Significance of triangle is basically that it indicates demand and supply, right? So the range is there. There's a contraction happening, right? Neither there's too much of a demand, and the prices are not running away, nor there's too much of a supply, right? So there is some bit of a equilibrium, what we can say, right? Represents consolidation before a breakout, right? So generally it is showing a consolidation, and then after this consolidation, the breakout will happen. It may happen on the upside or the downside. It's very difficult to say before the breakout happens. Breakout from a triangle is a key market event, right? So breakout is important because that it means that either the bulls have won the battle or the bears have won the battle, right? Rarity of triangles generally rare in point and figure charts. So see, triangles are rare because it takes a lot of time to create a triangle in a point and figure chart. It's not easy to form a triangle pattern uh, because understand that the same triangle you will find if you are seeing a triangle in a point and figure chart, you will also see it in a bar chart also. In most cases, you will see it in the bar chart also. Let me just show you the price. What's the basic price? In most cases, you will see a triangle in the bar chart also and point and figure also. It should have worked. Then you put it figure, and this should show you the same pattern only. One. Let's first go to a sideways pattern. This is more of a sideways only. Okay. So change this to this is 1000, so 1% 10 points. Okay. Okay. It may not be exactly this thing only because point and figure chart doesn't have time, right? But you will see that say here there's a triangle type of pattern, right? One bar, two, three, four, five. Like one, three, four. Yeah, there's five, five columns are there, right? Yeah, and we don't know exactly this is where the price, whether it shows the time, right? But it must be somewhere like somewhere maybe this area only. Yeah. It's not very sure because okay, but it will be somewhere this area only. So generally, it will also show you in the chart price chart. Also, you will see the same pattern because ultimately it's the same thing. The point figure is also made of the price only, so you will see the same in the bar chart also. but it may not have the same boundaries. Like point and figure chart may have little less boundaries because the noise is reduced in point and figure charts. This helps traders identify important breakout opportunities. So point and figure is like it reduces some of the noise, right? Because of which it will show you only those opportunities which are like very very like meaningful, right? Not every opportunity obviously will work, okay? But it removes a lot of say false signals or false opportunities also, right? Shakeout pattern. Let me see if I can show you this on point. Trade point. Trade point. H. Okay. This is a software by Prashant Shah. Free version will be there. It has an account. Used to allow from Google also, right? And created account. So, let's see. It's going to a demat account now. I think they've changed the setup. Uh, Previously, it was working. And this because they are brokers also. Now they have they're asking for PAN number and all. And maybe this must be their code. I think they've made this. Um, if you have the broker account, then this must be free, something like that. Okay, it's not allowing. I'll have to see that. Okay, because it's asking us to open a broking account, which I don't want to create. Okay, I'll check with Prashant. Okay, on this. But anyway, which is yeah, so we'll try to see it here only. Okay. Um, Shakeout pattern is basically like I'll show
So trading view can give you an option to switch to point and figure if you want to.
it has.
Yes.
Okay. Let me see.
In products,
Products. Okay. I don't use it much, so I have a subscription, but I don't use it. Uh, where it will be this.
Next to, yeah, yes, over there. Yeah, before.
Yeah, yeah, good. Let's go to what can change the this thing. How can I change the box size? Okay, I'll keep it simple only. Percentage will be better. Yeah, 1% is okay. Percentage, well, that is easy to understand, right? ATR will be a little complicated. We don't need RSI, but anyways, let it be there. Okay, and I can plot. Can I plot bar chart also, like the candlestick also below this? Is it possible? Anybody? Can I also have candlestick?
You can click on the square beside the unnamed right side towards the right
Okay. Yeah. Okay.
and do the double setup and like in one setup open the candlestick
Oh,
only.
good. Yeah. Okay. Same. I'll have to select the same. So if I'm all right. Yeah. This looks to be same, right? So let's see a triangle here. Like if you see here, there's a triangle, and there's a triangle, right? So if you see before this rise, there was a triangle here, right? And that same triangle is there in the content figure also. If you see this, why is it taking from here?
So switch off the magnet on the left hand
Okay,
side below.
this one. Okay, thank you. Okay, there's a triangle here, right? And the same triangle you can see in the price also, right here also. So generally you'll see the same pattern. Okay, the levels may be a little bit different because of the noise. There's less noise in the content figure, right? And then what we were seeing, the shakeout pattern, right? Shakeout pattern is basically in shakeout pattern. Basically, what I understand is that there has to be a prior trend. Okay, in this case, it is up, and then there's a double bottom sell signal. If you see here, there's a double bottom sell signal. Okay. The first requirement is that there has to be a trend either up or down, and this is an example of uptrend, right? So there's an uptrend, this we can see, and then there's a double bottom sell signal here, right? In an uptrend there's a sell signal, right? So this is basically showing that the in an uptrend you gave a there was a sell signal, which is generally your stop loss. Is anybody who is long, this will be his stop loss, right? So this stop loss was triggered, and somebody went out and exited his trade, right? But then what happens is that price may go little lower, maybe it will not go as low as this, but one or two boxes it may go lower, but then recovers, right? So basically the idea is that let it go down wherever it goes. Okay, one, two, three boxes generally should not go and break a new low. So if this is the low, then this low should not have been broken, so that has not happened. I suppose this was the low, that has not happened. So there's not, there should not be two double bottoms, right? The double bottom cell should not come twice, and then it recovers, right? The first recovery will happen here, right? Because it's a three box reversal, I assume it is a three box reversal, right? So you can enter here because the prior trend is up, right? And there's a shootout, shakeout, right? And basically the idea is that you can enter here. This is one area where you can enter, expecting that the trend will continue on the upside, right? Another area where you can enter is here, right? If there's a double bottom, double top buy signal, right? So this is also an area where you can buy. So either you buy here when this the reversal happens, there's a column of X created. Okay, so this will be area where you can buy, or here. This is again on the shootout, this is again the same thing, a little different example. So there's only like one box which is below this. Here there were four, five boxes below the low. Right? Again here also the trend is up only. Okay, the trend is up, and then there's a shakeout. Right, it would have triggered most people's stop loss. Right, and then it recovers. So you enter either here, okay, or you enter either here. Right, since you in your book it is the x is shown here, so you should answer in the exam, you should answer here. This should be your entry. This is a triple top buy also, right? So this should be your answer. If you see, this is your ascending triple top, yeah, which was there in level 1, right? So it's as simple as that. Everything is, see, if you see, it's just on basis on the breakout, right? So shakeout versus the double bottom breakdown in point and figure chart is basically it gives a double bottom breakdown, but then recovers again, right? Initially resembles a double bottom breakdown, right? So it looks like a double bottom breakdown, but it recovers. Okay, context again matters. The market must be strong. So, either it's in a strong uptrend or it's in a strong downtrend. Okay, the trend should be strong. The stock should be strong and above the bullish support line. So there has to be some bullishness. The long term movement should be bullish, right? If it's a short signal, then obviously it should be bearish, right? As of now, we are taking the example of only on the bullish side, right? Characteristics of a breakdown. There's a mild drop. So basically, just double bottom sell signal with few boxes, right? One, two, or maximum not more than three. Some pattern appears easier than others. So some patterns will be little not as great. It will not be textbook type pattern. Okay, a deeper than normal pullback may still be a shakeout. So say if you see this was a little deeper than the normal, right? But till it doesn't breaks another double bottom, right? If it would have, as I said, if it would have broken this low also, then you would not have taken it as a shakeout pattern. Then it's mostly a trend reversal, because two double bottoms hitting is generally not the shakeout, right? Shakeout confirmation will be some analysts require it to have to be the first breakdown of the new uptrend in a new uptrend. So generally, in a new uptrend, just the uptrend has started and then there's a shakeout. Generally, at the start of the new uptrend, shakeout patterns will be more common, right? Once this setup is very established, if the trend is established, then probability of a shakeout pattern coming is less. However, multiple shakeouts can occur in a strong trend. Right. If the trend is very strong, then you can see multiple shakeouts. Basically, it is just that in a strong uptrend, there is some bit of a pullback. Okay. If we see in here, I don't know. I'll remove this. How will I remove this? I don't want this now. Any idea?
What, sir?
This one, this part only, which is it's okay. I've reduced it to almost zero now.
You can
Okay.
click on the maximize button downside near adjustments.
Uh,
Figure
if you want to
this.
re-
This one.
if you want to remove, I think you can just go back to the same box, square box that you went before, right? And you can select the earlier
Yeah.
version.
Okay.
Right. Yes, right. Go to right where there is written unnamed.
Okay. Okay.
Yeah, unnamed. Yeah.
Okay.
Yes.
Got it.
So yes.
Thanks. Thanks. Yeah. I'm bad at trading though. Uh, shake out. So strong trend is strong, right? And if you see, yeah, here you see here, there's a strong trend, right? Very strong trend, right? And then if this you see, there's a double bottom here, sell signal here, right? But then it did not recover and went above it, right? So you would have bought here as a triple. There was a three axis here, but that would not have worked out, right? Uh, if, let's see another example. Yeah, here. You see this triangle is also you giving. If you see this low was broken, right? No, this low was not there. Lowest. Let's go. Yeah, here, yeah, yeah. This low was broken, right? There's a strong trend, right? Market was sideways, and then this low was broken, right? This there's a double bottom sell signal here, then it recovered, right? So basically, you'll buy here, right? This will be your buy
Uh,
signal.
just one question. I mean, I don't think so. There's a certain fixed set of boxes, right, of points and figures, which determines that, hey, this is the, triangle pattern, which has this certain number of boxes. Not nothing like that, right? It's still like a subjective thing.
No, it's a shape basically.
It's a shape.
Okay,
It
the
doesn't have a
triangle
fixed
has to be
certain
shaped.
boxes.
Say many people say that not boxes, but basically many people say that you should have at least five columns, right, in a
Mm.
triangle. So if you see this is some will not take this as a triangle because there are only one, two, three, four columns, right?
Okay.
So some will not take it as a triangle, right?
Okay.
Uh, Generally, it should have at least five five columns, right? So here there were again here there were only three or four columns, right? So this again will not be taken as a triangle from by some analyst, right? Okay, there's one, two, three, four. This again is doubtful, right? Anyways, yeah. Mm, Trading the shakeout, basically the actionable on the three box reversal up after the breakdown. So after there's a breakdown, there's a three box reversal. As I said you that if there's after the breakdown, then there's a three box reversal. So this will be your entry. Either this can be or another thing can be where it recovers and makes a double top buy also. That also can be taken. But by that time, major effect of that may have been worked out already. Yeah. Entry signal wait for the price to reverse up, right? Key advantages close well defined stop loss because if you see here, in this case, when you're entering here, your stop loss is defined right here. This is your stop loss. So if the price goes and makes a O here, okay, there will be a O here and there's a be a O here, right? So it will not be under this. That's wrong. Okay. So if it reverses from here, then there will be the first O here, second O here, third O here, and fourth O here. So if this O comes in, okay, then your exit will be there. So you have like a four box risk, right? So whatever is your say, if it is 1%, then 4% will be your risk. And if you are entering here, then your risk is around 4%, 4 to 5% risk, right? So your risk will be generally small in this case. This pattern helps traders identify buying opportunities within a strong trend. So there are two advantages. One is your stop loss is very small. The second advantage is that you are always with the trend. You're not going against the trend. And trend we know is the most important factor, right, for a trader. Yeah. The second pattern is basically a very simple trend line break. There's a trend line here, right? If you see these dots are basically the trend line. Okay, and there's a double top buy here, right? So that will be a trend line break. Uh, Simple, right? So this is your trend line, okay, and this is your buy, right? This is your buy. Simple, right? Here it's not very clear, but like this is your trend line, okay, and there's a break of the trend line, right? So here if you see the trend line is not exactly broken, but there is a bottom sell signal, right? So this is like not a very good signal, but some people will take it, some will ignore it. It's also a triple bottom sell signal, so that also adds little value to the pattern, right? It's as simple as that. It's just the trend line break. That's it. Okay, we can see it on the chart. So if I make a trend line like this, right? So this will be a trend line break when the price makes this O. Okay, so when the price made this O, this is your trend line break, right? Every time there can be a trend line break. So it's a very common pattern. A trend line break occurs when price moves beyond a defined trend line. Okay, the bigger the trend line, the more touch points the trend line has. Obviously, the importance increases. The same way by what we see in a chart, a candlestick chart or a bar chart pattern. Same way the trend line has to be used. Types of breaks can be breakout will be on the price if the price moves above the bearish resistance line, or the breakdown can happen when the price goes below the bullish support line, right? This importance is that it indicates a shift in demand and supply dynamics. So there is a shift a bit from demand, the shift is to supply, and from supply the shift is to demand. So basically, uh, a bearish trend line break like here, like there was demand, right? Because the trend was up, the demand was more than the supply. Now here the supply has increased and the demand has reduced, or maybe the same, but the supply has increased, right? So basically this is telling you the demand and supply difference. A broken trend line suggests market sentiment is changing. So the indication is that market is, say, from bullish it is changing to bearish, or from bearish it is changing to bullish. It can also be the trend line break can also be from bullish to sideways, or bearish to sideways. Because when the market goes sideways, there will be trend on breaks which will happen, right? And those breaks will not be meaningful basically. It is not always a reversal, as I said. There can be that it goes to sideways consolidation as well. A break does not guarantee a trend reversal. It may lead to a consolidation before the next move. So it can be just the consolidation, right? But at least if it is consolidation, also that also it is better that you exit. If you have a position, you exit the position, because unnecessary it will not make any money. Both in both cases, if the market is sideways, you are not making much money, right? So it's better to be out of the position. Again, here context matters. The importance of trend line break depends on the volume, momentum, and confirmation signals. So, if there's a trend line break and it is coming with more volume, or the momentum is very strong, if it's like it's not breaking is with just one O, if it is breaking with three O's together, then the importance obviously increases. So all those things will matter, right? You can see other tools along with it. Like if you see here, you can see RSI also, right, on chart pot and trigger, right? So if RSI is also giving you a bearish signal, then also it can give you, it can be acted as a confirmation tool, right? And if you see here, it is the RSI also increases, right? Other tools of this can be taken, right? All basically confirmation tools of bar chart patterns, candlestick patterns can be taken in point and figure also. Yeah. Signal reversal pattern. So this is another type of pattern. Here, if you see, yeah. So generally in this there is a downtrend. Say here, the prior trend is down. Okay. Okay. And then if you see the lower O's are being made, right? And then suddenly there is a reversal, okay, and there is a double bottom, double top bias signal, right? So generally these patterns are difficult to identify initially. It can be similar to what we see as a falling wedge, okay. In bar chart patterns, if you see, it will look like a falling wedge, okay. it can be similar to that. It's not very clear here, but the the pattern can be similar to that, right? It's because we don't have the prior history of the chart, we cannot say, but it is like a falling channel or falling wedge which is in a downtrend, right? And then suddenly there is a breakout, right? So similar to that is this. Okay. Same way here also, if you see, there is a channel type of a pattern which is like the here, if you see, the downtrend is not very strong. Here also the uptrend is not very strong, and then there's a breakdown happening, right? So it will not be that the uptrend or downtrend is very strong, and then it breaks down basically. Right? Basically, it's similar to what I said, the wedge type of a pattern in bar charts. Yeah, similar pattern. When you look at pattern figure, you will find that. Yeah, represents a sharp change in the supply and demand. So basically, the prior there was a supply, in a downturn there was a supply, and then suddenly the demand came in. Right, that is why it directly shifted from downtrend to uptrend. Pattern structure is basically it begins with a bullish or a bearish signal. So first there has to be a downtrend or uptrend, whatever. Okay, followed by a rapid break in the opposite direction. So then there's a break in the opposite direction, right? Whichever direction it is, it will change. So if it's downtrend, then it changes to an uptrend. If it's an uptrend, then it changes to downtrend. Again, here also context matters. There is a weakening uptrend. A bullish reversal in a slowing uptrend may indicate consolidation or exhaustion of demand. Yeah. So basically, they've taken an example of an uptrend. The uptrend is there, but it's weak, right? It's not very strong. Okay, you see the uptrend is there, but it's weak. It's not a very strong demand zone. Okay, and then the demand exhausts and supply starts to increase. Okay, so that is where this. Sorry, yeah, this one. Okay, so then the supply comes in, right? In a strong uptrend, if a breakdown does not extend far, it may be a shakeout rather than a true reversal. So if the trend is very strong, okay, and such pattern comes in, okay, then it may not be a reversal. It can be just a shakeout. What we saw previously, the shakeout pattern, it can be something like that. Analyst perspective is basically observing trend strength and signals and confirmation signals is critical before acting on the reversal. So here, if the trend is very strong, then you should not ignore this signal reversal pattern, because it has to be a weak trend. Okay, and then if it is confirmed by other signals like volume, like momentum, generally in such cases you will see the momentum is declining. Okay, uh, generally momentum is very low, and then suddenly there is a rise in momentum, right? There's a big spurt in price, right? So that signals a reversal. Oh, I think this is a trap pattern. So, okay, I think there's a mistake here. This is duplicate. Yeah. The next is a trap pattern. Yeah. It's a breakout or a breakdown followed quickly by a opposite move. So basically, if you see, there's a breakout here, right? Up there was a bullish breakout, right? The double top buy signal, and then it reverses and gives a double top sell, double bottom sell signal. It's same way here. If you see, yeah, there was a breakdown, right? And then it reverses and gives a double bottom, but double top buy signal, right? So it's a trap, right? It gave you one signal, immediately it reverses and gives another signal. There can be two types of trap: bull trap that occurs in a downtrend. So bull trap will occur in the downtrend because basically there's a Let's see in chart. Okay. Uh, since the current trend is up, we will look for bad rep. Okay, if you see here, there's a bad rep. If you see, um, the trend is up, right? There's a double bottom sell signal here, right? And then it reverses immediately, and then gives a double, in fact, triple top buy signal, right? So it's a bad trap. The bears are trapped here. Basically, similar to the shakeout pattern, but basically here you are buying at the breakout, right? Yeah. Bear trap occurs in an uptrend. Often, tricking sellers are into entering entering promotions. So basically, what happens in a strong uptrend? As soon say sellers are eager to sell because they think that it has the stock has gone up so much so fast and then it will fall. So as soon as they see the first sign of weakness, they start to short here. Yeah. And ultimately they find that okay, they are gone against the trend, and the trend persists, right? The trend continues and they lose, right? Basically that's the uh, logic behind it. Context again critical here. Strong uptrend has to be there. A bull trap may just be a shakeout rather than a true reversal. So a bull trap can also be just be a shakeout and then a true reversal. So true reversal doesn't happen, right? Bear trap occurs in long downtrends. So bear trap, if it occurs in a long downtrend, potentially signaling supply exhaustion near resistance. So if there's a bear trap in a downtrend, okay. So basically, what they mean here is that there has to be downtrend here. There's no downtrend. Let's take another stock, maybe Bata. There's a clear downtrend, right? And no buy here. Here, if you see, yeah. Yeah, so if you see here in a downtrend, there is a double top buy signal, right? And it was a trap, right? It again went down, right? So in a so say anybody who is saying that okay, it has fallen so much now, this is the first sign of say a breakout. Generally, the first breakout in a downtrend is a trap, right? Generally, it doesn't work. So okay. A bear trap could signal that supply really is exhausted. So here it is showing that the supply is exhausted. So it looks like the supply is exhausted, and then suddenly there is a supply, right? Yeah. And the analyst will need to exercise careful judgment of potential trend change. Okay. So these are times when there can be a trend change also, right? Uh, because the supply has exhausted, and that is why the price has gone above the previous high. But then before becoming a bottom here somewhere, okay, generally the price will become sideways and there will be false signals here. So even if it is a bottom, initially it will give some false signals on both the sides. Even for the bears, it will give false signals. If you see here, it broke this low, just went by two, three columns and boxes and again recovered, right? So if at the bottom has to be happening, then also it will give you false trades in both the directions generally, initially at least. Common during consolidation. So again, you will see these traps in consolidation at the bottoms, at the tops, and at the middle. Okay, so these trap patterns you will see at the bottoms, like here. You'll also see them at the top, where the top will be made right somewhere, maybe here. You can see there was a breakout here, right? And people will think that okay, the current trend is again resuming, and then it reverse again, right? Again, if you see here, there was a trap, right? So these things will happen at the top, at the bottom, and at the center where there is a consolidation, like somewhere, and there is a strong consolidation here. It's not clear, like here. Trend is strong. There is some bit of consolidation. If you see here, it broke down, like right, it broke down below these lows, right? These lows were broken down. One or two columns of O's was broken down, and then it reversed again, right? So at the center, at the top, and at the bottom, right? Generally, this in the entire trend, there will be some places it will do these things. Okay, often occurs near trend lines in unsettled markets. So these will also happen near the where there's trend line or price support or price resistance levels. Indicates indecision and lack of clear trend. So this again shows that there's indecision, there's no proper trend. Say if you see all these three places, the top, the bottom, and somewhere in middle, okay, there's no clear trend. Market is sideways, trying to find the direction, right? So at these points, generally you will find these patterns. Analyst consideration, careful judgment is required before confirming a trend continuation or a reversal. So this pattern should not be traded immediately, as you see. You need to have some bit of judgment and some confirmation before that. Okay, it can happen because it can happen at the top, it can happen at the bottom, it can happen in the middle also. Some type of judgment and confirmation will be required to trade this pattern. Okay, I showed you this. Okay, any doubts, any questions here? This also is twice. Okay, then next is the long tail down pattern. A long downward tail signal for speculators. So basically, this is more of not for investors, but more about for speculators. Okay, generally, it requires 20 boxes or more. Okay, so maybe you can generally in a higher time frames, such long 20 bars, 20 boxes is very rare, but you may get it in shorter time frames. Maybe if you're using say 5 minute, 10 minutes, 30 minutes charts, then you can find such 20 boxes. Okay, that is why generally is more for speculators than traders and investors. Okay, it's a potential market. The potential market scenario is important. Okay, during an uptrend, could occur after a bad earning report. So basically, if a stock is in a good uptrend and then suddenly there's a bad earnings, right? So then trend is up and people are bullish, people are buying, and then suddenly the earnings come very poor, or there's some issue with maybe some sudden news comes in of US FDA or something. Okay, so like in bar chart patterns, I remember recently there was one HCL Tech, HCL Tech. Um, if you see uptrend, and this was the result day. The result it went down by almost 9%. Right, lower time frames, you will find maybe this is that. Yeah, you will find such, maybe how many bars are there. Yeah, one. It's not very clear. One, two, three, four, five, six, seven, nine, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, exact 20 hours. Okay. So luckily it fulfilled that 20 bus criteria, but sudden move like that. Yes. So this is similar to what we are trying to see. Okay. At the end of an extended downtrend, or it can happen also after a strong downtrend, suddenly there's a good news or something, right? Generally, at the end of a downturn is rare, but it can obviously happen. Because say what happens is that, say say everybody is bearish, the trend is down, and there is some good news which comes in, right? You can find such patterns there. Okay, some or even it can be because of short covering, right? Suddenly a short covering came in and it can give you a big move, right? May indicate capitulation before reversal, right? So basically, it's the capitulation and then the reversal happens. It's an actionable signal only valid on the three box reversal up. So basically, you buy after a three box reversal. So basically, somewhere here you buy where the A is there. Stop loss placement below the long tail, making it clearly defined and nearby. So basically, your stop loss will be below the low, right here. If there is a O which happens, right, that will be your stop loss. Okay. The good point is that the stop loss is very small, right? But again, you are going against this short term, say, big down move, right? So that is the risk, right? But your stop loss is small, then it's not a problem, right? Because the prior trend has to be up. That is important, right? In this case, it did not. It would not have worked out. If you see, you would have bought somewhere here, and it continued to go down, right? So every time it will not work. Obviously, in this case, it did not work out. Okay, and so I feel that it's not a very good way of trading, personally. Okay, but like there can be like moves like that. If you see here, this would have, again, this is like almost 20. I'm not sure, I'm not counting it, but almost a very big fall, or prior trend is up. Okay, and then if you have bought here, it would have worked, right? So it will work somewhere, it will not work somewhere. But I would have loved that the sequence would not have been like 20 boxes. If it was 10 boxes, then it's fine. Generally, I will not like a 20 boxes fall and then try to buy it. That's not my way of trading, anyways. Okay, big burst up, also known as super pattern. Okay, so it's a powerful breakout pattern in strong stocks. So generally, the price trend should be strong. Okay, so basically, it is like you see the trend. This move is showing the trend. You know, there's a very strong trend, right? And then there's a correction of say 3-4 bars. Okay, a small correction, 3-4 boxes. Okay, a small correction, and then it recovers and makes a new high again. So this is your buy signal. Okay, so there's a strong trend, right? With the column of axis, you can see the trend, and then there's a small corrections, and then again a breakout. Okay, it was first described by Prashant Shah, who is a CMT, the owner of Define Edge, what we were seeing. Okay, so he's the owner of Define Edge. Okay, he basically mostly uses point and figure charts only. Okay, pattern rules are simple. Start with a double top breakout. So there has to be a double top breakout. So basically, this obviously move will have at least a double top. When we say double top breakout, does it mean that it has to be only double top breakout. It can be a triple top breakout also. Any sort of breakout will suffice, not a problem. Okay. Price move at least 10 to 12 boxes after the breakout. So there has to be at least a 10 to 12 boxes movement before the after the breakout. Like this breakout happened and there's a 10 12 box movement. Then there's a mild correction, which is like 3 to 4 boxes. Uh, Maybe five also is acceptable in some cases, but beyond five, I will ignore. Okay. Buy on the next breakout with a well-defined nearby stop. So basically, because if you see here, your stop loss is here, right? So if you're buying here, your stop loss is always safe if each box is 1%, right? So basically, so this is 1, 2, 3, 4, 5, 6% is your stop loss. Approximately 6% is your stop loss, right? So which is like bearable, right? It's not a very big stop loss, right? Buy on the next breakout with a well-defined nearby stop. Key characteristics are basically opposite of a long tail down pattern. It is similar to the long tail down pattern. Um, the difference can be that there were 20 boxes were required. Here there are only 10 boxes. Another difference is that that was only in an uptrend there was a correction, a big correction. Here in an uptrend there is a small correction. So that's a big difference, right? It is exclusive to stocks because generally stocks move like this. Generally, it will not happen in commodities or currencies. Generally, okay. So generally, you will find this pattern more into stocks because stocks are an earning asset, right? So you can always buy and hold because earnings will be there. So stocks move much faster and more in percentage wise than commodities and any other asset class, right? Best suited for stocks with relative strength buy signal in a column of X. So generally, if those stocks which have a stronger relative strength compared to the benchmark, that I think that is what they mean. Okay, or I'm not very sure whether they mean relative strength compared to the benchmark or relative strength of the past data, but basically there has to be strong trend. That's it, right? Can also be actionable on a three-box reversal before the breakout. So this can be seen in one box reversal charts also and three box reversal charts also. Obviously, most of the pattern what we are seeing here, all can be seen in one box reversal also, two box reversal also, and three box also. Okay, so that is basically, in fact, it will be more meaningful in a three box reversal because in a three box reversal, if you are not getting any correction, okay, after such a strong move of 10, 15 bars, then that is rare, right? In three box reversal, generally you will get some bit of a correction, right? Okay. Pole warning pattern. I think we'll do this pattern today and then end for the day. Okay. And then from price projections, we'll start from tomorrow. Okay. Uh, it's a column of axis that is a high pole or low pole. Okay. So basically, by pole, what we mean is basically a big move, right? And that big move has reversed also. So the pole will be defined as basically not only this move, okay, there has to be up move and then it has to reverse also. So this is a pole, right? Then the pole is complete. There's a down move and then it reversed, right? So then it is a pole. If it would have continued and remained here and then gone below and then gone up, it would not be a pole. Okay, the pole is when it reverses. Okay, then only the pole is set. Okay, extends significantly beyond the breakout. So when after the breakout, it significant goes up and then comes down also. Okay, early text. Some people use three boxes beyond the breakout. So the pole they will see that only three box after three box there is a pole. Okay, and if reverses there is a pole. But some say that there has to be five boxes. I will take with the definition of five boxes because three boxes is very common, right? So it will not be a meaningful move. Generally, five boxes or more than five boxes should form a pole. The actionability is that it's not typically a tradable pattern, but if you are into this pattern, okay, then it should be used as a stop loss. So basically, if the stock reverses more than 50%, so say how many axes are there? 1 2 3 4 5 6 7 8 9 10 11 12 axes are there. If there are 6 O's, which is 50%, right, which are formed, then you exit. Okay, so 1 2 3 4 5 6, so here you'll exit, because there's no double bottom sell signal which is happening, right? It's a pole. So and like this, like it can continue, and by if you wait for this to happen, you would have eroded most of your profits, right? If you had bought also here, okay, your profit would be eroded if it breaks below this. After seeing such a good profit, you will give it up, right? You will give back all the profits, in fact end up with a loss, right? So to protect your capital and protect your profits, okay, you exit somewhere in between. If you are seeing potent figure and if there's a pole being formed, okay, then exits 50% point, 50% level, right? If the you just count the number of axes, and if the more than 50 axes happen, then you exit here. O's happen, then you exit. Mainly used as a stop loss indicator to protect your basically profits. Okay, high pull or low pull warning is basically triggered when more than 50% of the column is retraced, right? So here in this case also, if we see 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 O's are there, right? So we'll take for 8 boxes, right? So 1 2 3 4 5 6 7 8, right? So we'll exit somewhere here, right? If we are in a short position, we'll exit our short position. At least we will have some profits left, right? Can be useful when no nearby support level is available. So if you see there's no support level, right? So now where will you exit your position and protect your profits, right? So that is one way of protecting your profits basically. Okay. Okay. Will with this we'll end for the day. Any doubts, any questions?
No, sir. Thank you.
Okay. Anybody else? Oh, there are some messages. Uh, is volume profile and market profile? No, they are different. Volume profile is part of a market profile. Market profile includes price profile and volume profile together. It is called market profile. Generally, most people take market profile as only price profile, but it is also having volume profile into it. Right? August 2007 Bank Nifty has a triangle on PNL. Yeah, it may be. Uh, okay, let me see this. Yeah, triangles are very common, I would say, in point and figure. Okay, yeah, this is a good example. 1 2 3 4 5 boxes. Yes, okay, it's 5 columns, sorry, and then the breakdown from there. Okay, so very good example. This is, I think, the same chart only. Okay, fine. Okay, any other questions, doubts, or we'll meet tomorrow morning 10 a.m. Okay, India time.
Thank you, sir.
Yeah, thank you.
Thank you, sir.
Yeah, bye.